The road ahead for Tesla, what is it? Colin Rusch is here to tell us. He's managing director and senior analyst with Oppenheimer. Colin, you surprised the stock isn't holding its gains today?
Not really. I mean, the truth of the matter is that Tesla continues to have an important technology lead in the EV space. A lot of their competitors are really struggling on production and cost reduction. And so as we look at Elon's attention span and the depth of management at Tesla, this isn't a huge change to see him resigning from the CEO position at Twitter. The team at Tesla is a deep, very talented team, and it's very focused. Certainly he's going to have his hands full on the technology side at Twitter for sure. But right. I think the real issue for Tesla now is around demand. And I think the thing that may happen here with the Twitter change is really a repair of the Tesla brand with a certain segment of society.
Popular stock analyst says Tesla has a lot of growth going forward. In this video, the stock expert reveals what the problem may be. Listen to what he has to say.
Okay, so Colin, that's perfect, because that's the question I want to ask. In the couple of minutes that we have left here, can you take us through, as an analyst, how influential Tesla is with regard to setting prices in the auto market, not just for EVs, but possibly the auto industry writ large?
Yeah, I think it's critical. From a functionality perspective, we're really watching this next rollout of the self-driving technology to look at how they position that, how the technology works, and what the pricing model ultimately looks like. The message that they put out in the last quarter was that they were out looking for users, right? They were out getting customers to buy the vehicles that they could then upgrade through services and other revenue streams. I think what we're watching to see is how that plays out here. We certainly see them with a cost advantage in a number of geographies where they're actually generating cash. They're at a sustainable growth pace. And what this looks like from a margin perspective, both at the vehicle level, but then at the add-on level, is critical to what the valuation is on the stock. And I think it's TBD, to be honest. And that's what we're watching for here over the next several months.
Colin Rusch is an Oppenheimer analyst who is focused on basic materials, consumer cyclical, technology, industrials, utilities sectors, with 442 price targets and ratings documented since 2010, spanning on 38 stocks. Rusch noted in a recent interview that Tesla continues to have important technological needs in the EV space, and a lot of their competitors are struggling on production and cost of production. He also added that Tesla has a deep, talented team who is really focused on achieving its goals. Is he right? Does Tesla really have what it takes to keep leading the EV industry for years? Let's find out. Hey guys, welcome back to Tesla Tomorrow. In 2022, Oppenheimer analyst named Colin Rusch downgraded Tesla stock from outperform to perform, in a note to clients stating that challenges regarding Twitter have left sentiment towards Tesla severely damaged. This was at a time when investors were on edge, awaiting the latest from Tesla CEO Elon Musk's plans for Twitter. And now the analyst has noted that Tesla is way beyond what people perceive it to be. How well is Tesla currently doing, and what does Colin have to say about the car company? Keep watching to find out. But before we get on with the video, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Recent reports stated that Tesla will recall more than 1.1 million cars in China due to potential safety risks, according to the company's top market regulator. The report states that from May 29th, Tesla will take back 1,104,622 vehicles that were produced between January 12, 2019 and April 24, 2023, which is nearly equivalent to Tesla's total sales in mainland China during the 4-year period. This is not the first recall Tesla has had to make with regards to its cars. In February, the car company was ordered by the TSLA to recall over 20,000 vehicles. This was done due to a defective windshield. Before that, Tesla was ordered to recall over 50,000 cars due to a fault with the EV car's self-driving software. Several analysts are seeing this as a sign that Tesla may not be doing so well with its cars, since the automaker had to recall such a large number of them. However, taking a critical look, this recall does not suggest that Tesla needs to repair anything in its cars. According to Rusch, this recall may not be as bad as the headlines are making them look, and the reports may just be getting blown out of proportion. Some experts say that the multiple recalls could actually be a positive thing for the EV maker. According to managing partner at Loop Funds, Andrew Murphy, a software recall is just so much easier in the new world order where Tesla can recall software and update it automatically. He also said the fact that Tesla can adjust and respond to the latest regulatory environment with a single, simple software update turns from what he sees as a negative for Tesla into a positive. Similarly, managing director and senior analyst for semiconductors and automotive technologies at Mizuho Securities, Vijay Rakesh, stated that this is a new segment and Tesla fans are starting to see some of the improvements that need to be put in. Rakesh noted that recalls of electric vehicles are not uncommon, as the technology is still being developed. General Motors recalled its Chevy Volt EV, which, according to reports from experts, costs the company over $1 billion. The sentiment is shared by other experts who believe the recalls will have no lasting impact on Tesla stock. Rusch believes that Tesla is still doing incredibly well in terms of its technology and products, and aside from this, Tesla is making profitable partnerships to make its products even better. According to recent reports, Tesla CEO Elon Musk recently met with several Samsung Electronics executives, including Executive Chairman Lee Jae-yong. This was the first private meeting between Musk and Lee. The meeting took place at Samsung Semiconductor's US R&D labs, and reports claim that the agenda included discussions about future cooperation in autonomous driving and semiconductor production. Samsung has been making strides in the automotive semiconductor market. The tech giant has secured orders from industry leaders like Nvidia and Mobileye. The recent meeting with Tesla executives could show that Samsung is looking to add Tesla to its client list. Samsung and Tesla have a long history of collaboration, particularly with the development of next-generation IT technology, including semiconductors for autonomous vehicles. Samsung and Tesla have worked together on the development of chips designed for autonomous driving, as reported by the Korea Herald. Similarly, Tesla's partnership with Japanese battery supplier Panasonic is becoming even stronger. The company recently stated that it will delay the production of its 4680 battery cells, championed by Elon Musk, and begin operations during the April to September period in 2024, later than previously scheduled, as the company aims to improve their performance. The tech supplier had previously planned to start volume production for Tesla between April 2023 and March 2024, but this will likely be delayed. The company stated in its earnings presentation that mass production is rescheduled to begin during the first half of the fiscal year, ending March 2025, in order to introduce performance improvement measures that will further enhance competitiveness. Panasonic is running a pilot 4680 production line at its Wakayama factory in Japan, while Tesla is already producing the 4680 battery cells, which Musk has touted as being the key to making cheaper and more compelling electric cars. Tesla has, however, struggled to meet its targets for production and performance of the cells. Tesla executive Drew Baglino said at a recent conference call that the company plans to steadily ramp up production of the 4680 cells ahead of the Cybertruck's production next year. The automaker currently uses the cells in a base Model Y. Similarly, Tesla's South Korea supplier, LG Energy Solution, said that it planned to set up a new 4680 production line at its domestic factory by the end of the year, although the company did not say when the batteries would start volume production. Tesla is also ramping up production across all its factories globally. The car company disclosed not too long ago that its Texas factory has achieved production of 5,000 Model Y vehicles per week. This means that it will be able to produce about 260,000 vehicles annually. This Tesla facility has an annual capacity of at least 250,000 vehicles. The concerns of most investors may, however, be if Tesla will not have enough demand for all the cars it's making. But judging by recent updates, this shouldn't be an issue. Looking forward to the future, there are a couple of solid indicators that electric car sales will continue to grow and prices will fall. With the dramatic fall in raw resource prices over the past first half of the year, notably including with the price of lithium, EV prices are expected to continue their downward trend. Further, with manufacturers continuing to invest heavily in electrification, specifically production expansion, per unit costs are expected to fall as well. Following the reactions from Tesla investors after the car company reported lower than expected earnings for the first quarter of this month, Tesla has increased the price of some of its cars in some markets. The automaker has actually raised prices in the US for all of its EVs except the Model 3, which is the least expensive offering. The price increase, which took effect recently, are quite modest, representing hikes of between 0.5 and 1.1%. The Model S and X vehicles were bumped up $1,000 to $88,490 and $98,490 respectively. The automaker believes suggested retail price for the performance versions of those cars is also now $108,490. Tesla may not be in the perfect place right now, but it's sure to get there in no time. The stock jumped more than 2%, seeing a spike near the end of the trading session after Elon Musk announced he would step down from his role as the Twitter chief executive. Musk announced that he'd found a new CEO for Twitter, and she will start in 6 weeks. Musk has drawn ire from investors in the years since the Twitter takeover saga began. First for selling billions worth of Tesla stock to fund purchase, and then from shareholders who said that he cannot effectively run Tesla, SpaceX, and Twitter simultaneously. The stock finished trading session that day with around $172.08 and continued to rise after some hours. Apparently, Elon Musk's role will be transitioning to being executive chair and CTO of the company, overseeing product, software, and sysops. Do you think Tesla's got a bright future ahead? Let us know down below. And don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.